Jobkeeper mortgages. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. I have my morning stein of coffee I'm still working through, and I thought we'd have a look at this domain article discussing or questioning if someone on Jobkeeper can still get a mortgage. Now, I was talking to a broker the other day. He shared with me the story where he had a client who had signed a contract, paid a deposit, and 2 days before settlement, his bank rang up and said, "Oh, how are you? How's work going for you? How's it going?" And the gentleman replied, "Well, I am working in the pub, so I am on Jobkeeper at the moment." And the bank said, "Oh, well, you're not getting your loan anymore." And the gentleman responded, "But my deposit, I'll lose that, yada, yada, yada." And the bank goes, "Bye, wouldn't want to be here." So naturally, he had to source finance from somewhere else. And there were other organizations, other banks that do provide mortgages on the Jobkeeper. So let's have a look at this, guys. Remember, the banks, they're not our friends. They're not our friends. I know they've got all the advertisements, and every time I go to CBA, there's like a guy there feeding a baby, working on the computer, it's all touchy-feely. They're helping you in your homes. Don't trust them, guys. So can couples still get a mortgage if one partner has lost their job? So, well, in some ways, if you can get a mortgage and you can support it on the income of only one partner, only one, and then both of you are working, then you could, in theory, hit that mortgage extra hard. I was looking yesterday, because I was in a video, I was discussing it was mentioned, new home buyers or first home buyers buying property over 1.4 million. And I had a look at how much it costs to actually borrow $1 million these days. It's not that much. So our cash rate is so low, guys. Interest rates are so low. You're getting stuff around 3%, even under 3%. And it's certainly manageable with someone on a decent income. $1 million. It's just crazy. The job situation is as dire as it has been this century. In April, the unemployment rate tipped 6.2%, the highest it's been since September 2015. And we'll bring that up, everyone. We'll bring up the unemployment rate, and you can see, how it's shot up. And remember, this is the ABS data. What I prefer is the combined unemployment and underemployment using Roy Morgan's methodology, which is different to ABS, sitting around 25%. Just a quarter of the workforce, everyone. Just dwell on that for a moment. That's a great way to start the day, isn't it? Worse, the participation rate, the percentage of people of employment age who have a job, is sitting at just 63.5%, a 15-year high. But the bank's doors are still open for the right type of borrowers. However, banks I'm not sure if that's the correct definition of participation rate. Isn't that if you're of the employment age and you're in the workforce by either having a job or seeking a job? Because if some people give up, then you're no longer participating in the economy. So I don't think that's quite right how to define that. Anyway, but the bank's doors are still open for the right type of borrower. However, banks are taking a much closer look at the buyer's ability to service a loan. Domain Loan Finder Executive Director and Lendy Chief Executive David Heyman says consumers can thank a federal government initiative called the Term Funding Facility for banks' ongoing appetite to lend during the pandemic. This gives banks access to low-cost credit the Reserve Bank Australia makes available. Banks are open for business as a result and very much still lending, and we've seen strong consumer demand for loans, he said. Nevertheless, the Southside Finance Director, Michael Coombs, says banks are concerned about the pandemic's effect on employment and property markets. Exactly, and we haven't really seen the ramifications of that. But more and more, I suspect the government is going to throw everything they can at property. it's going to be thrown at property. This seems to be the way that they are choosing. Well, it's the only trick they know, isn't it, to stimulate the economy? It's property. Because they want a greater spread of that cash they're injecting in there to keep everything propped up. So all you tradies that are getting these stimulus jobs, you need to rush out there and buy those extra utes. But here's the question. Will it work? Business confidence is in the gutter. Business conditions are low. Consumer confidence, well, it's in nearly the bottom of the chart, guys. There's a lot of pessimistic people out there. And even if people take advantage of these things and then the tradies get to work, will they be as inclined to spend? Will they be holding on? Will people be holding on to their money? We'll have to wait and see. There is evidence, this is evidenced by almost daily credit policy updates. Their concern is not so much the effects being felt in the market today, but what will happen in 3 to 6 months. I should do a poll on my community if you people think Jobkeeper is going to actually disappear, or if it'll morph into something else, or if it'll be a targeted industry. So it'll be interesting to see what happens there. Loans are still being approved, but banks have no tolerance for anything outside their credit policy, not even the most basic matter. Coombs says lenders will take into account JobKeeper and job seeker payments when assessing loan applications, which they use whichever is lowest, the support payment or normal income, taking into account both parties' income and expenses, assuming two borrowers apply for finance. I have seen cases where clients were already under contract to buy a property when they were stood down or had their hours reduced, Coombs said. They had no choice other than to seek finance on this basis. There may be an argument to proceed if they have good equity in an existing property or other assets and a sound capacity to service the loan based on support payment income, but it would not be sensible to seek finance in most cases where someone has lost their job. As might be expected, banks are laser-focused on lending responsibility after the Financial Services Royal Commission fracas. A spokesperson for the Commonwealth Bank confirmed the bank has introduced 2 questions to loan applicants that specifically address whether the pandemic has affected the customer's earning capacity. These are you aware of any changes to your broader situation that may impact your earning capacity? Have you been advised of any changes to your employment circumstances or income levels that will affect your ability to meet any existing debts or expenses? Well, I mean, this is people taking responsibility for their own situations. How many remember all these articles we've heard about, like these real estate agents that were investment gurus, or these people that have borrowed millions to buy developments up at Moranbah, in the coal mining area, and now, my $800,000 house is now worth $200,000. CBA also wants to see evidence from a potential borrower's most recent pay cycle to verify income. It may also ask for a letter from the borrower's employer to check claims about changes to income. Self-employed people need to support recent BAS statements and business projections. An ANZ spokesperson also acknowledged that as the pandemic was impacting Australians' income and employment stability, it was also making a more pointed inquiries into loan applicants' employment income. Borrowers will be asked to provide more recent examples of proof of employment or any change in employment, the spokesperson said. The banks say its home loans team is continually reviewing its lending criteria. Overall, banks need to be certain applicants can comfortably service a loan before they will extend finance, which is, after all, only sensible. It's in no one's interest to approve a loan borrowers cannot afford to pay off. So, there we have it, guys. There we have it. Nothing particularly surprising. I mean, honestly, if you can buy a loan if you can get a home loan and service it on government support, in some ways the banks like that because that is guaranteed in your pocket. In your pocket. Or at least I know people who rent it out to people on government support appreciated that constant stream. You have to let me know, what's your opinion of this? Do you think this is a good thing or a bad thing? It just shows you more how property obsessed Australia is. Would you take on a mortgage if you're on JobKeeper? Would you take one on, or would you wait to see? And we'll have to see what happens in September and October this year when the banks start pulling back their support, or if Jobkeeper will keep going on, particularly in certain industries that are really hit, like tourism. As always, everyone, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and you'd like to support this content, there are a few ways you can. You can join us on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy merch from HeiseSays. You can use Gold Pass from the Perth Mint or support us via PayPal. Take care, everyone. I'll see you in the next video.